What's up, investors? It's Trend Trader here. Today I would like to share with you three US ETFs that I have in my Easy Equities US dollar account. I chose these ETFs because they have the potential to give me quarterly dividends or distributions. And currently these three ETFs are on an uptrend. So as you know, the only reason I buy stocks or securities or ETFs is because they are on an uptrend. So I've been having these three ETFs for quite some time now. So today I decided to do a bit of a video on those three ETFs. So these are Vanguard ETFs, but you can also have the option of buying the SPDR or Spider ETFs instead of the Vanguard. But as I will show you, the Vanguard ETF has a lower cost compared to the Spider ETFs. So let's dive into those US ETFs. Remember, these ETFs, I have them in my US dollar account, so they are US dollar dominated. You can also buy these ETFs. If you have an eToro account, you can buy the ETFs there. Yeah, they are not just only exclusive on Easy Equities. All right, the first ETF that we are looking at is the Vanguard S&P 500 Growth Index ETF. So if you go to the Vanguard website, we can see some details of the ETF. You see that it's on Vanguard. As I said, you can also go to the SPDR website or iShares to track the equivalent of the Vanguard S&P 500 Growth ETF. Its tracker code is VOOG. So this ETF, it invests in the S&P 500 Growth Index stocks. As you can see, it is composed of the growth companies in the S&P 500. And as you know, the advantage of an S&P 500 stock is that of an index tracking ETF is that the better performers in terms of market size, they get into the index, and then the poor performers are chucked out. So like every other ETF, this is a general index ETF. It has survivorship bias, meaning that in the long run, you are more likely to make money than to lose money. So as you see, then this only focus on the overall US growth stock returns, and it offer high potential investment for growth. It also have a bit of some value shares. But what I want to talk about it's the fees. As you can see here, okay, we're going to start with the performance. In terms of a hypothetical growth, since 2011, the stock has grown by over 400 times. As you can see, if you had 10,000 US dollars, your amount would be now somewhere around 43,000 US dollars. And then different sectors are composed in this portfolio. There's communication services, consumer discretionary, consumer staples, energy. As you can see, energy forms 0.1% of this. There's a lot of consumer discretionary, but the largest holding so far, it's IT. We're not gonna talk about what's our opinion on each sector, but from this we can see that this ETF has a lot of IT in it, and then there's a bit of consumer discretionary, healthcare, and then there's industrials, but energy and utilities are the lowest holdings here. The ETF has about 233 stocks, and it has a net asset value of 5 billion. So the top 10 largest holdings, they make about half of the ETF there. Then as you can see, the largest holding is the typical US stocks like Apple, Microsoft, Amazon, Alphabet, Facebook, Tesla, Nvidia, PayPal, Netflix, and Adobe. So this, yeah, every time you buy an ETF, you want to look at the largest holdings so that you don't carry the same companies throughout, especially if you are trying to diversify. You don't want to think that you are diversifying, whereas you are just buying the same companies over and over again. And then in terms of fees, this I think it has about 0.1% fee. Yes, as you can see, the expense ratio it's 0.1% compared to other similar funds. The other funds are somewhere around 1%, but I think the Spider ETF has an expense ratio of 0.13, but it's not far from this value. And then in terms of distribution, this stock or this ETF makes regular quarterly distributions. As you can see so far, going back all the way from September 2019 up to March 2021, you can see now the next payable date is on the 31st of March of 2021. The record date is the 29th, which is next week. So if you buy now, you would still qualify for the distribution for this first quarter of 2021. Oh, so the ex-dividend date is the 26th of March. So yeah, you will miss that dividend or distributions. And this ETF will be distributing 34 cent dollar or $0.34. Let's put it like that. Yeah. So yeah, the advantage of this is that it tracks the S&P 500 growth stocks. There are about 232 of them. As much as this stock, this ETF is overweight in the IT sector, we know that if the IT underperforms, it will be replaced by a sector that performs well. And also, we like the fact that it's 0.1%, so it's like it's a steal for us. And it makes quarterly distributions, so expecting to be paid each and every quarter. So now let's look at the chart, of which that's the reason why we bought this Vanguard S&P 500. So I started recently to trade the US market. Ideally, I would have loved to buy this ETF around $163 per ETF, but I missed that opportunity. But as you can see, this ETF is still on a very nice uptrend. As you can see that it's currently respecting the 50-day exponential moving average, although it has retested this 50-day exponential moving average somewhere in September last year, and then again in November. And then recently in March, you can see that there were many instances where it closed below the 50-day exponential moving average. But as we said, this ETF is heavily invested in tech. If you've been following tech for quite some time, you will know that tech has been taking a beating. So this may explain why it has been showing some signs of weakness. But overall, the 200-day moving average is still pointing upwards, which is a characteristic of a strong uptrend. So now you see, okay, we started buying this ETF somewhere here at almost at the end of February. That is when I started to trade the US market. And then there was that little dip there going all the way down to $220 per ETF. So now the ETF is back, it's trading above the 50-day moving average there. Let me just clear everything else. So yeah, it's currently back above the 50-day moving average. So for now, we expect the ETF to continue to trade higher. As we said, this is just an ETF. All the poor performers will be discarded and they'll be replaced with better performing stocks. So in the long run, we expect the ETF to continue to go all the way up. So I mean, as long as the S&P 500 points go up, the value of this ETF will go up as well. So you can't say that maybe the short-term target is this or the short-term target is what. For me, as long as the ETF is trading above the 50-day moving average and it shows a strength and an uptrend strength, I'll be holding this and receiving those quarterly distributions. So now let's go to a sector ETF, which is the Vanguard Energy ETF. Now this one, it's different. I'm not holding this for the long overhaul. I'm only holding this for as long as it's performing in a specific way. So now you see in the US, they have this mutual fund. So I'm looking for the Vanguard Energy ETF. This one is an equity fund. Just make sure that when you do your research, you go for the right ETF so that you don't get the incorrect information. Okay, while it's loading, remember to check the description below. We've got plenty of stuff there. We've got links to opening Easy Equities account, link to opening an eToro account. We've got some books. We also have the list of the equipment that we use to make our videos, so you can get all that equipment at Amazon. Just from time to time, always remember to check the description below. We also have the systematic trend following cheat sheet. It's there, the information is there, it's available on different platforms. You'll find it on, it's different versions of it. On Gumroad, we have the cheat sheet that has an ebook and videos and an Excel worksheet. We also have the cheat sheet on any checkout, which is a South African platform where you can purchase digital product, but there it's only the ebook and it's available for 30 rand. So we believe that it's still at 30 rand. And then also you can check Fiverr. If you are struggling with technical analysis, you can just go there at Fiverr. We have a link there. Then you can book a session whereby I will be teaching you technical analysis depending on the plan that you'll be buying, because there is we have a basic plan, standard plan, and a premium plan. So we've got different offerings there. If you choose the basic plan, basically it's an introduction to investing. We'll be telling you what is investing and the risks and benefits of investing. If you choose the standard plan, then we start the introduction into technical analysis and everything that is included in the basic plan. And then if you choose the premium plan, there we will share with you the systematic trend following strategy that we use in our trading. And then it also covers everything that is covered in the basic and standard plans. So if you want to learn technical analysis, just check the link to Fiverr there. It will take you, start from 10 US dollars, depending on the exchange rate. Currently, the basic plan is about 165 rand, and then the premium plan is about 392 rand. You just go read through there, see what you need, and then choose what you need there. Okay, thank you. Now let's go back to the Vanguard Energy ETF. So you see this one, it's a sector ETF. It does not track the overall market. This one, it measures the index that measures the investment return of the stocks in energy. So at this moment, we are bullish of the US energy stocks. Well, we also have some energy stocks here in the JSE, but the focal point at this moment is the US market. So this one, it's a passively managed ETF, and then it includes stocks, companies that are involved in exploration and production of energy products such as oil, natural gas, and coal. For those who've been following us for quite some time, especially on Facebook, we've been bullish on Brent crude since somewhere, I think it was October 2020 or November, but we bought oil while it was trading at $43 per barrel. We held all the way up to $68 per barrel. So yeah, we made a good coin out of the trade. So you see the expense ratio of this ETF is also 0.1, and the risk potential, it's more risk, more reward. And then previously this ETF has been not necessarily on a downtrend, but between 2011 and 2021, especially from somewhere around 2018 all the way to 2021, or just somewhere in 2020, we wouldn't have bought this ETF because it underperformed the market. Basically, we have a filter of the ETFs that we want to buy from time to time. We don't just buy all the ETFs. So if you look at the composition here, so this is an energy ETF, so you'd expect to see a lot of energy related stocks. As they said, they also look at exploration. So you can see 40% of the stocks is in integrated oil and gas, and then about 24% is in oil and gas exploration and production. And then there's refining businesses, oil and gas storage and transport, and then there's equipment. And then there's a bit of oil and gas drilling and coal and consumable fuels. And then this ETF has about 97 stocks and has a net asset value of 55 billion. And the top 10 holdings makes about 68% of this ETF. and then there's about 0.3% of foreign holding. And then as you see here, the largest holdings, it's ExxonMobil, Chevron Corporation. I'm trying to see if there's Occidental. Okay, I don't see Occidental here, but there's ExxonMobil, Chevron, which are oil and gas companies, the biggest one that I know of, and Phillips 66. I'm trying to see if there's where we did had a bit of Kinder Morgan incorporation in our eToro account, but we have since sold this position. Okay, this one, it's an equipment company that you see right there. So yeah, we like this ETF. In terms of fees, okay, I've already mentioned that it's 0.1%, and the pay it's about 1.34%. And then it also makes quarterly distributions. As we showed you that it has been underperforming, yet they were able to pay about 60 cents of distributions there. As you can see, the ex-div date has passed. It was yesterday, the 26th of March 2021. So the paying date is on the 3rd of March. So well, if you were to buy on Monday, it's going to be the 29th. Okay, yeah, you would have missed because that would be the record date. So now let's go to the chart of the VDE. This one, it's almost similar to the chart of oil, of which we were able to trade the oil Brent crude, but not the ETF, because at that time we were not trading the US stocks. But ideally, we would have wanted to buy the ETF somewhere near the $50 region. But as you can see, the ETF broke above the 200-day exponential moving average. It broke above, then it came back to retest. So every time you miss the first breakout, you can just buy the retest. So it retested the breakout level and then started to trade up. And then as you see here, we have this golden cross. Golden cross is when the a slow moving average crosses, oh sorry, it's when a fast moving average crosses a slow moving average. In this case, the fast moving average is the 50-day, and then the slow moving average is the 200-day. So some people, they use the golden crosses or the death crosses as their signal. For us, it's just the price and volume and other stuff. So yeah, that golden cross happened there, showing that there is a bullish or an upward momentum in this specific sector. So then there was another retracement. This time, the ETF found support on the 50-day moving average. It didn't go to touch the 200-day moving average. And then since then, it has been trading up, as you can see, going all the way to test $75 region. If you go back, you see here, there is this resistance level that was expected. So there was a bit of a pullback sometime in March. As you can see here now, the stock or the ETF has showed a lower price rejection, and it found support here in the 50-day moving average. So now it's currently moving up. So we added into this position of ours with the stop just multiple ATR below this level. So since here we are not trading this with an intention of making a short term, we're just adding on to our existing position. But if you wanted to trade this, then you would buy here near the current price, which is $70. The short term level to look at is $75 per ETF. But as you can see here, we've got these top prices, which are sort of near 85 rand or $85. Yeah, we are used to trading rands a lot. $85. So that would be target one, and then that would be target two. So how fast this will happen, we don't know. We're just going to hold this ETF for as long as it's moving upward. Okay, now let's go to the final ETF that we have there. It's the Vanguard Financials ETFs. So as you can see, it's also on an uptrend, but we first want to see the ETF, get to the root of it and see what it has there. So here there's no mutual fund, you just go straight to that Vanguard ETF. Okay, so it also has an expense ratio of 0.1%. It's a financials ETFs. It's an index benchmark for stocks that are involved in the financial sector. It's passively managed, as you can see. So it invests in stocks that provide financial services. So it also has a risk of 5. And as you can see, this one has been on an uptrend for quite some time, even though there was a bit of a dip there in 2020. Everything just dipped at that price. So it's not unique to this ETF. So it's a financial ETF. We want to look at the largest holdings. Okay, 24%. It has diversified banks, and then the asset management and custody banks. It also has regional banks, about 15%. So the lowest holdings there, it's about it's reinsurance and other diversified financial services. But most of them is just financial services. Like in South Africa, we have the Satrix FINI or the FINI ETFs. It depends on the provider. It's similar to that one. We've been bullish on the FINI ETF. We have it on our South African tax-free savings account. Yeah, so we are bullish on banks. We've made a video somewhere around 2020. We have the link to that video there. We'll add the thumbnail to it. You can check that video whereby we said we are bullish on the bank sector and also the property sector. So this ETF has about 400 stocks and a net asset value of 9.1 billion. The top 10 holdings makes 40% of these ETFs. So the big holdings here, it's like the likes of JP Morgan, Berkshire Hathaway. So if you are Warren Buffett fanboy, you probably want to buy this because there's a lot of Warren stuff in here. There's also Bank of America. We are bullish on the Bank of America. Just go to the eToro link there. You will be able to go and see our eToro portfolio to see what do we have in there, what's the performance. So far, our account is not eligible for copy trading, but in 2 months it will be eligible. Then from there, we will let you know. If you just want to write onto what you know, you can just click copy trade, then you'll be able to copy each and every investment that you make on eToro. But there are terms and conditions there. One of the T&Cs is that your account need to have a minimum balance of 200 US dollars. So if you would like to copy our US trades, you better start saving about 4,500 rands, because that's the equivalent of about 200 US dollars. So start saving so that when we let you know that our account is now eligible for copy trading, then you can just start clicking copy trade and follow every trade that we make on eToro. So yeah, back to this, we have a buy on eToro of Bank Op, or the Bank of American Corporation. And then there are different banks. There is BlackRock. BlackRock is an ETF provider. Despite the ETFs are under BlackRock. Then there is Morgan Stanley, Charles Schwab, which is also a bank, and then they offer stock brokerage services. And then they have American Express. So yeah, it's a lot of financial companies. And then distributions. It also makes quarterly distributions, as you can see. So we'll be expecting to receive some 38 US cents on the 31st of March. So it pays regularly. This one is lower than the energy ETF. So yeah, let's go to the chart. The fees we've already covered it, that it's 0.1%. So these ETFs, in terms of fees, they are very cheap compared to some of the ETFs that we have here in South Africa. But we hope that South Africa will catch up to these low fees. So yeah, we missed our preferred entry point here, which was around $60, but we got the best entry point with a Satrix FINI in South Africa and the property ETF. We also have a mentorship program that we run on Telegram. Someday we'll make a video about that, but to be a member, you pay. It's not a free service. You pay to join the mentorship program. There we discuss a lot of things, stocks, how to trade and everything, risk and money management. And there, the members of that mentorship program, they get real-time updates of the trades that you make. If you like to participate in that program, just leave a comment below, then we will get in touch, then we'll let you know how to go about by becoming a member. So yeah, we missed this perfect entry opportunity. As you can see, there was a gap up there, this gap. So if there's a gap up, some people they believe that the gap must be filled. Well, maybe at some point the gap is filled, but it's not a must. If it happens, it happens. If it doesn't happen, it doesn't happen. You don't have to demand it. You just have to ride the trend. So we saw that the ETF, it had multiple attempts to close above the 200-day moving average. Eventually, it succeeded around November, and then it kept up on volume. As you can see, there's a large volume there as it kept up, and then it has been holding that position for quite some time. There was a bit of a consolidation. It broke above, did a bit of a retest, then continued, formed another consolidation, and then it broke above this consolidation. It came back, it found support near this previous resistance level, but also it found support on the 50-day moving average. So we like to see multiple confluences. For instance, this ETF found support on the previous resistance level. Also, at the same time, it has this 50-day moving average. So there is no really a better place to buy unless you see a lot of confluences. If you know how to do price volume analysis, you will see that as the ETF was pulling down, the volume within, meaning that there weren't a lot of sellers. So these are some of the things that you want to see when you want to make a buy decisions. But to get more in this price action volume analysis, just go to Fiverr. Make sure that you book a course there so that we can teach you. Or if you can do it on your own, just go through the Gumroad route there. The course it's very cheap, it's $12. There's even an option to rent it at I think to rent it it's about $12, but the course is at $12. You can get the ebook with the set of rules of when to buy stocks and how to do money and risk management. Then we have videos on how to set up chart either on investing.com or trading view. So really, we've made sure we ensured that everyone can use technical analysis to make their trading or investing decisions. We've got a lot of products that are available for you, and it's not just product; it's affordable product. So back to this, after it found support here, it continued to trade higher. We saw that at the end of February, beginning of March, the market caught a flew a bit. We saw that the market started to retrace a bit, as much as it didn't come near the 80 dollar region. We were expecting the ETF to find support there. Luckily, it had a quick recovery. That is why we focus on strong stocks or strong ETFs, because even the pullbacks, it's just they are short lived and then they quickly find support to go back to the levels that you prefer. So now the ETF is currently trading at $85 per ETF. You can buy here, have your stop multiple ATR below this swing low, or you can even have your stop loss just close below the 50-day moving average. So the short-term target it's about $88, but then there is a possibility that it will continue to go up. So that's the advantage with ETFs. It's like free cash. As long as you're going to pay less for them, it's good. And also, they have the survivorship bias. The good performance will stay in the ETF. The bad performance will be replaced by good performance. So, in the long run, you're going to make money. These are ideal for long-term investors. I mean, I define myself as a trader, but I only sell stuff that are showing weakness. I just cut my losses for all my better winners or my the stocks that are performing well. I keep them for as long as I can. So I won't be selling this ETF anytime soon unless it stop moving up. So that's it. These are the three ETFs that I wanted to share with you that I have in my US dollar Easy Equities account. So the first one, it's the Vanguard S&P 500 Growth Index ETF. Let me remove this. Yeah, it's the S&P 500 Growth Index ETF. And then I'm bullish on the energy ETF. As I've mentioned, I have this. I also have Sasol in my account. If you missed the Sasol analysis, you can click there on the pop-up. It will take you to the Sasol analysis. In fact, we've done about 3 Sasol analyses. We started last year, sometime in November. Then we had another one earlier this year. And recently, we made another Sasol analysis. So just check the link there. It will take you to the Sasol analysis. And then the final ETF that you are bullish on is the Vanguard Financials ETFs. We also have, if you click there, the pop-up function, which will take you to our JSE analysis of the financials or the banks and retails and property ETF, who mentioned that we are bullish. So that's it for today. We will see you on the next analysis. Don't forget to subscribe and click the like function if you like the video.